Video will be going over IRS Form 14135, Application for Certificate of Discharge of a Property from a Federal Tax Lien. As you know, this is not the only way that taxpayers may get out from under a federal tax lien. There are actually a couple of other options that might be available. You can apply for a tax lien subordination. You can apply for a withdrawal of the tax lien itself. And by filing Form 14135, you can apply for a certificate of discharge. So you might have to talk to either your tax professional or to the Taxpayer Advocate Office to determine if this is the correct option for you. But in this video, we'll simply go over the mechanics of this form as if this has already been decided, and then we can talk about some options you might have available to you. So this is a fairly straightforward form. It's 3 pages. In part 1, the taxpayer information. If you're an individual, you'll put your name, first name, middle initial, and last name. If you're a business owner, then you'll put the business name on the taxpayer information form. It depends on how this appears on your lien. So make sure you have a copy of the lien, and everything that you're putting into this information field is as it reads from the lien notice. So your primary Social Security number. If you're married, then your spouse's Social Security number would go in the secondary block. And then if you're filing for a business and you have an employer identification number, you would enter that. Followed by your address, city, state, and zip code, and telephone number and fax number. In item 2, you'll complete the applicant information. You can simply check the box if you're also the taxpayer. If you're not the taxpayer, then you should attach a copy of the lien. And we'll discuss a little bit more when we get down to section 10. But you'll enter the applicant information if you did not check this box right here. So if this is your business, but then you're the applicant, you would put the business information here, and then you would put your personal information here, owner of the business. And then if there's either a new owner, if this is property that has been purchased by someone else, then you'll put that information here, and then the relationship to the taxpayer if applicable. So if anything is not applicable, then you'll simply write N/A. Item 4 is the attorney or representative information form. So if you're working with an attorney or a personal representative, you'll enter their information here, and then specifically what role they're playing. Are they representing you as the taxpayer? Are they representing the financial institution in case, like for example, you're trying to refinance a mortgage and you need to discharge the tax lien from that piece of property? Then this person might be representing the lender as kind of presenting this as a way to convince the federal government that this is in the government's best interests. And so in addition, you'll need to attach either IRS Form 8821, which is, it allows you to, it allows the IRS to give certain tax information to a third party on your behalf, so you're not the go-between. Or you can attach a copy of IRS Form 2848, which is the power of attorney form. So the difference between these two forms is that the power of attorney form actually allows you to delegate certain representation powers to your through the power of attorney, whereas the 8821 form simply allows that person access to information on your behalf. They can't do anything with that information with the IRS. In Block 5, you'll enter the lender or the finance company's information, so the company name, the point of contact's name and phone number. In item 6, you'll enter details from the transaction, so the proposed sales price, and then expected proceeds to be paid to the United States in exchange for the certificate of discharge. Now we move to item 7, and this is probably the part where you'll know this from your conversation with either your accountant, your tax professional, or the IRS taxpayer advocate. But this is a breakdown of the different Internal Revenue Code authorities that you think would enable the IRS to discharge your tax lien. So in order for the IRS to discharge your tax lien, there has to be some relation to the Internal Revenue Code section that authorizes it. And we'll go through these briefly, but this is the point that you'll want to make sure you clearly understand when you're talking to either the taxpayer advocate or your tax professional. Section 6325B1 simply states that the value of the property that is going to be attached by the lien after this is at least double your federal tax liability plus any other debts that are on that lien. So the example in the instructions, which actually is IRS Publication 783, the example shows a tax liability of $15,500, and then as an example, other debts of $23,334. So the total of that is $38,834. In order for the government to remove the tax lien on this piece of property, the value of the property would need to come in at least twice that amount. So when you multiply that number by 2, the property remaining subject to the lien must be at least $77,668. So that means in order for the government to release the tax lien, you would have to have at least that much value in your property. In the next section, 6325B2A, in which the United States receives an amount that is not less than the value of their interest, this simply means that if there's a property that is being that there's a lien on, and there's a prior encumbrance senior to the lien, then if you turn around and sell that property, the federal government needs to have assurance that the proceeds are going to be enough to pay the IRS as well as all of the other senior lien holders. And the example in Publication 783 is if you have a lien that totals $203,000 and you have a property that's going to sell for $215,000, but there are other debts, let's call it a mortgage, of $135,000 that's senior to the tax lien, and then proposed settlement costs of $15,000. So the IRS lien interest equals $65,000. That's how much the IRS would be entitled to receive for the sale of that property. So after the IRS receives that $65,000, there's still an outstanding tax debt of $138,000. So the IRS would have an incentive to release this lien because even though the tax debt isn't being paid in full, there's a demonstration that this property is going to be sold all the senior lien holders will be paid, and then the federal government gets the rest of the money. Or at the very least, they're going to get, you know, the rest of the value of the property that they would be entitled to. In the next section, 6325B2B, is basically the opposite. This means that the interest of the United States in the property that will be discharged has no value. So if all of the other debts that are senior to the tax lien are greater than the fair market value of the property or greater than the sale value of the property, then that would be a reason for the IRS to release their lien on this piece of property. They're not going to get anything. They probably never will get anything, and they're going to need to find another avenue to enforce their tax debt. In section 6325B3, this one is an example where the discharge, the proceeds from the property sale that are held in escrow subject to the liens and claims of the United States. So if there are two mortgages that are senior to the tax lien that total about $32,000 and $5,000 respectively, the government's interest in the property is $40,000, and then there are three other junior liens of $3,000, $12,000, and $3,000 again. The proceeds of the sale would then go to each of those 6 different lien holders in the appropriate order. So the 2 senior mortgage debts would be paid first, followed by the IRS debt, and then the junior subordinate debt would be paid after the IRS debt. So as long as the proceeds from the sale will be held in escrow, then the IRS would have a basis to be able to discharge this lien because their interest is being held in escrow and will be paid to them. And then in section 6325B4, this simply states that this discharge is issued to a third party who owns the property if they make a deposit or an acceptable bond is posted. So if someone takes over the property but posts a bond or a deposit for the amount that's equal to the value of the United States interest, then that would be an acceptable result. So now, once you do that, if you are the person that becomes the new property owner, but you're not the taxpayer, then there are certain options you might be able to pursue under a different section of the Internal Revenue Code, 7426A4, for a return of your deposit. But that's probably outside the scope of this this video, since we're only talking about the lien discharge form. So if that's the option, that's probably something that a purchaser of the property would be using this form for, not necessarily the taxpayer. So in section 8, you're going to put in a description of the property. There are several examples here. If it's a house, you should write, pretty significant detail. If it's a vehicle or an airplane, you would describe the make, model, put in a serial number. If it's real property, you'll also want to put in the street address. For real estate, you would need to attach a copy of the deed or title or that shows the legal description. And then for discharges under 6325B1, then you would need to show a copy of the deed or title for property remaining subject to the tax lien. So that's only for the one where the value of the property is at least double the tax liability. So Section 9, you will need to attach an appraisal, a professional appraisal completed by a disinterested third party. The IRS has pretty clear and distinct guidelines for what a professional appraisal is, what a disinterested third party is. So you'll need to make sure that your appraisal meets those requirements. And then you would also attach a copy of either county valuation, like you can usually get some sort of valuation that your county might attach to your property for property tax purposes, or your professional real estate agent may be able to do a comparative market analysis. An auctioneer would propose a selling price. Whatever the report is, that's kind of a secondary to the appraisal, you will need to attach that. And then again, for applications under 6325B1, you'll need to provide valuation information for the property that's remaining subject to the lien. And item 10, you'll either attach a copy of the federal tax lien or liens, or you'll list the numbers that you can find in the top right corner on the lien documents. In Section 11, you'll attach a copy of the sales contract or the purchase agreement. In item 12, you'll need to attach a copy of a current title report. And again, you should attach each of these, but you should also provide brief descriptions. If you have attached a copy, then a brief description should suffice. If you haven't attached a copy, then you probably need to provide a little bit more detail. Again, Section 13, a copy of the proposed closing statement, also known as a HUD-1, and then additional information that might influence the outcome of this request. If there's pending litigation, if there's an unusual situation, you can attach any supporting documentation here. Same with the escrow agreement. You'll need to attach that specifically for discharges under the Internal Revenue Code section 6325B3. That was the one that specifically states that the proceeds will be held in escrow, right? So that would be, subject to having a satisfactory escrow agreement. And then in 16, for 6325B2, you would need to provide a waiver if you are applying as an owner of the property but you're not the taxpayer. Then under B2, you would need to waive the rights that would be available if you made this under B4. So let's go back real quick. So B2 is either the United States is going to get their money based on what the interest in the lien is, or they're not going to get any money because the property doesn't have any value, versus B4, which basically tells the government, I bought this, but I don't owe the taxes. Now that I own this property, you need to take this lien off and figure out another method to get your money from the taxpayer. So what that waiver is saying is that if you're applying as the owner but not the taxpayer, if you're applying under B2, then you must waive the rights that you would have under B4, where you would have access to a remedy under a different part of the Internal Revenue Code for a return of your deposit. And again, there might be situations where it makes sense to do that. If you're looking for the government to discharge this property subject to a tax lien because it has no value, or the amount of proceeds, the United States government wouldn't get any money if sold, then probably doesn't make sense to post a bond for a piece of useless property. In line 17, you'll sign under penalty of perjury that you're not submitting a false application and that everything you've attached is true, correct, and complete to the best of your knowledge. If you're married, both spouses should sign this. If you're representing a business or you're a single taxpayer, then one signature is appropriate. So once you've completed this application, then you'll need to send it to the Internal Revenue Service. And there is an office in Florence, Kentucky. I'll attach the address to the description in our show notes, but it's IRS Advisory Consolidated Receipts, 7940 Kentucky Drive, stop 2850F, Florence, Kentucky, zip code 41042. So you'll mail this, the completed form, to that address. You can also follow up with Taxpayer Advocate, the Taxpayer Assistance Center. You can contact the revenue officer that's assigned to your case. That information should be on your lien. So that should do it for this form. If you liked this video and you want more detailed instruction, we've written an article which you can find on our website. Simply go to teachmepersonalfinance.com, type in IRS Form 14135 in the search box, and our article will appear. If you like our articles, please subscribe to our newsletter. If you like our videos, please subscribe to our YouTube channel. And as always, if you have any questions, comments, or concerns, please post them in the comments section. Thank you very much.